Hey everybody, welcome to the Market Minute for Sunday, the 17th of September. And we have Fed week approaching. So on Wednesday, Jerome Powell is going to issue the next rate policy, and just about everybody believes, I think there's a 97% chance that there's going to be no rate hike this week, pushing something off until perhaps later on this year. So that's already known, and that's already priced into the pie. So everything depends on his ability to, my analogy is stepping up to the first tee at a golf tournament and striping one right down the middle of the fairway. So that's what he's got to do. He's got to not only pause, but give the market just enough information as to why they're pausing and give the market a sense of certainty that they know what they're doing and they know what's coming down the road. If there is certainty that comes in on Wednesday, markets will probably accumulate or rise after that, with that sense of certainty coming back into the market. If there's uncertainty that comes into the market, we will see the market distribute or sell off over the course of this week. Now, let's talk about price in terms of technical terms here. So it's really, I think we can all agree that it's useless for us to predict which way the price is going to go. We just don't know. And a lot of this will depend on factors outside of the control of the market. So irrespective of whether you're bullish or bearish, and my own personal sense is that just about everybody is bearish right now because of seasonality. Because, and I'm doing air quotes right now, everybody knows that the last 2 weeks in September is bearish. So should we also be bearish if everybody else is bearish? Well, no. Let's bring it down to price levels to watch. So on the S&P, we can see this very clear triangle that the price is trading within. And there's a pretty strong range that the price is trading within that we can also see whether or not the price is going to be rallying above this or selling below this. This is the current range that we have with support and a reversal off that support, and resistance and a rejection off of that resistance from Thursday, Friday of this past week. So what we're seeing is we have a top here just above 4,500. And if we see the price close above that, then there's a much stronger chance that we will see the price continue to accumulate from here. If, on the other hand, we see the price not only cut below this rising trend line and close below that, but also if we see this close below, I think it's about the 4430 level. If we see a close below that 4430 level, then that is fairly ominous, and that points to an eventual test of at least 4350, if not lower than that. So the targets would be maybe 4300, or I believe the extent of that would be probably limited to about 4200, which is the last breakout level of the S&P back in the June timeframe, as well as the 200-day moving average. The other factor to consider here is that the charts are really well charged up. So right now we're seeing range expansion into range contraction. So this is like a spring that's being wound up. These very high values that we have on the weekly and the daily chart shows that we're trying to hold a very tightly wound up spring in our hands, and it's getting fatiguing. And it would be easier if we were just to let it go and let the price go where it's going to go. So again, we don't know which way that energy is going to go, whether or not it's going to be to the upside or to the downside. Watch those price levels that we talked about, say 4,500 on the upside or 4430 to the downside, about a 70-point range. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.